So the trade today was very simple, but first we have to develop and understand a little context backing the setup for it to make sense. So on a daily chart on the S&P 500, we've seen I think 9 or 10 out of the past 11 sessions, we've had green days, meaning every single day the market has been uptrending, making higher highs and making higher lows, and we have not seen a break under the previous day's low for about 2 weeks time now, since about the first week of August. So very strong uptrend, very strong move up. Buyers are very, very strong. Now pulling up a 1 minute chart here, the market overnight had a very strong rebound and we were rallying up into 56.65, 56.66, which is highlighted by this level here. And this has been a level that has been on watch and on my charts for over a month now. Now, if you're a short-term trader, I think it's vital to always have these levels on your charts. This was based off of resistance on July 17th. Going into the pre-market plan here from over a month ago on July 17th, the plan here was to short the market if it resists or it acts as resistance at 56.66, 56.65, then I'm interested in playing shorts on an intraday perspective. And that was over a month ago. Now, this level has not been tested until today, August 22nd, that I was watching for the market to reject here for me to fit this into the context that sellers are present in a very strong uptrending market. Now, the market rallied into this, had a really strong rejection, and I didn't get an entry confirmation signal here because it didn't make sense from a risk to reward. The rejection happened on the news. It rejected really fast, and I wasn't comfortable chasing the market. However, after a failed rebound, the market began to sell off, and around 10:08 Eastern Time, 10:09 Eastern Time, if you want to, after you watch this video, go back and replay your data. There was some significant volume here occurring at 56.44 all the way up to 56.46 on the 10:08 to 10:09 Eastern Time drop after the market had rejected this resistance level. Now, pulling up what this looks like, I'm going to pull up the heat map here, and I've highlighted basically what I saw. I saw some large prints. Let me extend this over here. Right here, 56.44, and even some more prints up here around the 56.46s. So I made this a significant level that I want to be watching if the market retests this at some point in the future, because if the market has an agenda to move down, contextually, we have just rejected resistance, and contextually, we've seen a very strong drop with heavier volume. You can see how the volume has spiked here. So this makes the selling volume, or the volume in general, more significant down here that I spotted at 56.44, 56.46. So the thesis with this was as long as the market can reject this, then it's very likely that the market can move down into the nearest level of support or the nearest level of demand. And this is kind of how I've been trading a lot recently. If-then statements. If this level rejects, if this level supports price, then the market doesn't have any support until Y level. So if X holds, the market has a high likelihood of gravitating towards Y. Now, what this means in terms of this setup was as long as the market rejects 56.44, 56.46 intraday, then there's nothing stopping the market for a quick little 15 to 17 point drop to the downside on the S&P futures until Y level, which is this lower green box here at 56.31 to 56.29. So ideally, if X rejects or if X supports price, then there's nothing stopping the market from Y trading. If-then statements have been working so well for me and gauging the market's reaction around my levels of interest. So over here, we can see the market had rejected this really well once. It also had rejected the market really well again here for the second time. Now, the market had put in a lower high here around 10:40, 10:45 Eastern Time, and this is where I got my first entry short to the downside. Now, I knew as long as the market can reject that 66 level to the upside and start moving down under these support levels, then a very large sell-off can occur with what we have been seeing in the market, because I don't have any support or any demand until that level that I just told you under us, which we can call my Y level, X and Y. Now, in the investor trade community, I post all my trades and exactly what I'm watching in real time, win or loss, all my thoughts, all my updates, all my scenarios, all my trading plans. So there's no like cherry pick and play trades or going back in hindsight. Everything happens in real time here. My first trade was shorting this rejection here, what I spotted as sellers at this 56.44 level. I got short at the 42s with a 4-point stop loss, going for an 11 to 13 point reward if the market started moving in my favor. And this trade was about a $4,000 worth of risk for an $11,000 profit. And what happened here is I was correct on this. My entry was at this yellow oval. The market began to sell off. We eventually broke under the low of day. So the low of day was taken out. The issue with this is my rule of thumb is I never let a 7 to 10 point profitable trade ever go red on me, especially now that the market had broken the low of day. So I was in profit about 9 points on this, and then the market reversed and I got out of this trade for break even. Now, even though I got out of break even doesn't really invalidate my thesis. It just means that the market moved in my favor, and going with my rules, I can't let it go red on me. Ideally, when this happens, I look for re-entries because most of the time I just mistime the market and eventually it moves in my favor, after I stop out. So I always look for re-entries to compensate for that. 7 minutes after I exited this trade for break even, I re-entered at a better price. Now the re-entries are key because now I could get a fill at a better price. If I am entering at a better price, that means my risk is going to be smaller and my reward is going to be much higher. At this point, I got short now with the 43s, with now a 3-point stop loss instead of a 4, and now a 12 to 14 point target. So now my risk was smaller, and this trade was $3,700, and my reward was $15,000, and this was a 4-to-1 planned, and I exited this trade for about a 6-to-1 planned R multiple, and this was, the market had rallied back into this level. We put in a double top there. The volume had increased. I took it short there with a stop loss above this high, and it was all said and done from there as the market broke under the low a day. If X rejects, then there's nothing stopping the market from going to Y. Y was down here, which was my target. The market had aggressively sold under my target. I waited for weakness to come in, and I got all out of this trade here at the 25s. It was a 3-point risk for about a 17-point reward. Really good risk to reward. And then the market kept moving in my favor, and I could have made X amount more, but I followed my plan, and that's all I could do. And then the market had bounced off of this demand zone, and now old support at 56.31, 56.29 has now acted as resistance, and the market had sold off under that. Remember, if X rejects, then there's nothing stopping the market from going to Y. This is essentially what I call my line of least resistance. Some people call it line in the sand. That if it holds, there's nothing stopping the market. There's no roadblocks. There's nothing in the way for the market to go to the next level of interest. And in this example was the demand zone. Now this is key because the trade that I took yesterday is going to be based off of this 56.31, 56.29 level. So remember that, because today it was my target for the short, and later in the session after I walked away, acted as resistance and sold off the market about 40 points from that. So 56.31, 56.29 is going to be key, because this is the level and the trade that I took on Wednesday, August 21st, using the same exact strategy. Also, if you're not following me on my Instagram, I definitely recommend doing so. I'll post a link in the description below to follow me. I recap all my trades on here in depth after I take them, and there's some just really good tips and tricks. It's a good resource if you're not following it. Again, it'll be in the link in the description below. But yesterday, the 21st of August, was pretty much the same exact thing. It was about $3,700 worth of risk, a 6-to-1 risk to reward ratio, and this trade took about 5 minutes time. It was a very fast moving trade, simple analysis, all using this strategy that if X level holds, there's no supply or resistance until Y level. The thesis for this trade was very simple. The market had sold off around 10:14, 10:15 Eastern time, and on this sell-off, we got a quick little rebound up. And on the rebound up, similar to the trade that I took today on the 22nd, just flip it. Yes, today was on the sell side. Yesterday, this trade right here was on the buy side. At 56.31 intraday, there was some strong buying volume that occurred at 56.31 to 56.29, which I've now labeled as this pink rectangle. And this was a level that I was watching. As long as the market can hold, if it pulls back into this, then I expect a rally up and break the previous day high. If X level holds, X is my level at 56.31 to 29, which was a level that got developed from strong buying on the time and sales. In fact, you could see it really good here. What I mean by large buying is it left a area of very little volume, which means the market moved up there with ease around the 10:18 a.m. Eastern time mark on yesterday's rally up. It left an area of low volume with strong buying. And this is how my level intraday was developed, that as long as it could hold, I expect an upside rally. So if X holds, then Y could trade, and Y was the high at 56.45. The market had pulled back into this level, and as it pulled back, I was able to catch an entry long at 56.31 with a stop loss under the 29s, so about a 2-point stop loss, going for a 14-point reward to the upside. 6 to 7 to 1 risk to reward ratio. So here's what it looks like. Here's the buying that I mentioned earlier. The market had dipped down into there. Look at the volume spike. A good tip is that if you see a lot of moves that are very fast with strong volume spikes or sudden sharp reactions, I don't want to say all the time, but most of the time I look for more so reversals of those moves. And we could kind of see 3 of them so far here today. We could see a quick, sharp, sudden drop, sell off to the downside with high volume that got bought up. And we could see off the 10 a.m. news, the market had tried to rally up here with strong volume, and that immediately got sold into. So I like looking for sudden, quick moves. But for this trade here, we had a level of interest, which was level X, meaning that as long as X could hold, the market should go break the high, the previous high. And we had supply at the 56.49s. So the market held the 31s and 29s. This is where I was able to get that entry point. And 4 or 5 minutes after that, the market had immediately shot up, and I got all out of this trade up here when the market had rallied up. And it was just a quick, simple move that I'm spotting buyers intraday, which is where my X level forms, that as long as those buyers can support price here, then the market should gravitate towards Y, which was the previous high in the supply zone. And that was the thesis for this trade. This was a $23,000 profit, 15 points with about $4,000 worth of risk. Now, I don't want people looking at the profits. Yes, it's been a great month, and yes, the profits are all good, but look at more so of the R multiple and the risk. If your risk, let's just say you're comfortable losing $400 on a trade, then you got to divide all of this by 10. You have to be comfortable losing $400 to make $2,300. And if you're not comfortable with that risk, then you're never going to be comfortable losing and having growth and consistency in your trading. And guess what? Remember that level that I just mentioned here yesterday where I took that long trade at the 56.31s to 29s? Well, it supported the market so well there, and that was my entry for the long yesterday. Now, that was my target for today. And look how well it rejected the market at 56.31.29, like I just said earlier. So it's been really good trading so far this month. You know, I've crossed the 100K mark so far this month. And if my win rate was lower, obviously this number would be a little bit lower. But look at my win to loss. I'm getting entries with 2-3 points worth of risk and 13, 15, 17 points worth of reward. My average losing trade is about $2,000 versus my average winning trade being about $13,000. So it's just been really good trading, and I hope the momentum continues. The idea here is risk to reward is so important, and I think if you can get your entries as close as possible to when it confirms the setup to be in your direction, as close as possible to your stop loss so your risk is minimal, but you have to have great confirmation to enter that setup and a valid plan. If you can do that, this is how I've been maneuvering the market with this strategy and being able to have these small risks and high rewards that enables me to have such a great risk to reward ratio. My losing days are, I had a $5,500 losing day and a $7,000 losing day. And if you were to look at my winning days, right, their majority of them are one trades. I take one good setup and I walk away. Versus if I take one trade that's a losing one, I try to make that money back, and that's how it spirals into 2 trades, 4 trades, 3 trades. So let's keep the momentum going. I'm hoping that the market brings some volatility. I strive in this volatility. I love to see it. And let's keep pushing. Very powerful, simple strategy. Make your trading simple. Don't overcomplicate it. All I need is a simple chart and volume gauging the price action around what I trade the most, the S&P 500. So if you got any value out of this, you enjoyed it, you learned something from it, I would appreciate a like. If you're new to the channel, subscribe and comment if you have any questions. But I'm ending it. Peace out.